In the last few weeks, there has been several positive Tesla news stories, and it is anticipated that there will be more of these in the upcoming months. It won't be shocking if Tesla continues to post strong market and sales records for all the quarters in 2023, given the automaker's recent exponential rise in sales and profit. The past year has seen amazing progress for Tesla, even though the EV manufacturer's road hasn't always been easy. As CEO Elon Musk stated, Tesla is going strong on stock market and it's poised to overtake Apple as the most valued business on the planet. Tesla will be the most valuable business in the world, valued more than both technology companies, Apple and Google merged, according to prior predictions made by Musk. What other recent Tesla success case exists? Keep on watching. But before that, welcome to Investor Facts, where you may learn about investing and how to make the best financial decisions for your life. Make sure you click the subscription button and enable the notification bell if you haven't already. Share, like, and comment. The automaker sales in China, which is in January, performed better than anticipated and are one important indicator of Tesla's development in 2023. Tesla sold 66,051 electric cars built in China in January, an increase of 18 over the previous month. According to information provided by the China Passenger Car Association, although the U.S. electric car manufacturer sold 55,796 automobiles built in China, an increase of 10 over January of last year, it increases Tesla's sales. Following a series of price cuts in the largest auto market in the world, Tesla shares increase in value. Shortly after, a similar discount were announced in the U.S., and they were further increased earlier in January, as it contends the growing opposition from rivals located in China and the largest auto market in the world. As they work the hardest and most intelligently, Musk claims that the Chinese market is the most competitive. Musk continued expressing his admiration for the Chinese automakers, with which Tesla is in direct competition. Musk added that the Tesla China team is succeeding in China and that he believes the business can draw the top people there. In China, Tesla came in second place after BYD, which shipped 150,164 electric vehicles in January. To deal with mounting inventory, Tesla Shanghai planned to reduce the output by a third from November and extend the Lunar Year holiday for employees in January. To meet demand sparked by price cuts on its best-selling models early last month, the business now expects to increase manufacturing at its Shanghai plant during the next 2 months. Following Tesla's price reduction in China, the firm permitted price reduction for its vehicles in the United States, which led to a huge increase in demand for such vehicles. Elon Musk, the CEO of Tesla, recently informed investors that the company's orders for January have been the strongest in its history and have increased by almost double the rate of Tesla's global production. Similar news shows that all Tesla SUVs now qualify for $7,500 tax credits, according to recent reporting on electric vehicles tax credits. The adjustment was made as a result of the Treasury Department expanding the definition of what is an SUV, which has a higher price limit to apply for the tax credit. While it was anticipated that Tesla EVs would qualify for this tax credit, the 5C Tesla Model Y was previously categorized as a sedan, which meant it didn't qualify for the 30% tax credit, because it costs more than the government's price ceiling of $55,000 for sedans. Numerous Tesla investors and bulls are shocked that the other Tesla models are disregarded. Not all Tesla Model Y vehicles are included on the IRS most current list of eligible vehicles for the tax credit since, according to the IRS, these vehicles are not considered SUVs. Since there is an applicable MSRP cap of $55,000 for electric vehicles and an MSRP cap of $80,000 for electric SUVs, according to the IRS. The $7,500 tax credit was not available for Tesla Model A sedans or Model X SUVs, nor were the trucks and vans. This is because Model A is priced starting at around $105,000, while Model X starts at around $121,000. In response, Musk expressed his displeasure with the original classification, the Biden administration's Inflation Reduction Act, which offers billions in rebates for EVs and home improvements focused towards weaning people of fossil fuels, is where the tax credit comes from. Recent users, though, have verified that the Model Y is now qualified for the tax benefits. A list of electric and plug-in hybrid vehicles that qualify for the federal tax credits under the new inflation reduction legislation has been released by the Federal Revenue Service. Several Tesla models are now on the list because of the new rule. which applies to purchases made on after January 1st of 2023, eliminates the tax credit cap for automakers that exceed 200,000 electric car sales. The Inflation Reduction Act also provides several incentives for charging electric vehicles. Companies that install electric vehicle charging stations are eligible for property credit. Up to $100,000 per charger, the IRS will pay up to 30% of the entire costs associated with buying and installing charging equipment. Given that the crossover SUV vehicle is one of the fastest growing vehicle sectors, increasing the number of Tesla SUVs that qualify for the full $7,500 tax credit may increase consumer demands for these electric vehicles. The Internal Revenue Service and Clean Vehicle Tax Credit were created by Congress to accelerate the deployment of qualified electric vehicles, and today's decision is a significant step in that direction, according to Albert Gore, Executive Director of the Zero Emission Transportation Association. He continued by saying that the organization has long supported making the tax credits at the time as available as workable, although it may be urged that the high cost of living and the inflation of aluminum can reduce the market of electric vehicles. The Tesla's bears failed to recognize the importance of brand innovation and news in attracting new customers to Tesla stores and websites. This is helpful for future Tesla vehicles like the Cybertruck in particular. Tesla is an established brand with little to no need for marketing to reach potential buyers. It is not surprising that Tesla customers like to stay with the company when switching cars because it produces excellent automobiles. Out of its enormous subscriber base, Consumer Reports surveyed more than 300,000 vehicles. The percentage of owners who said they would buy a specific brand again if given the option determines the owner's satisfaction score. Tesla outperformed Mercedes and Toyota in the most recent Consumer Reports rating of the most popular automakers. The automobile manufacturer has been identified as a second car brand that customers are most likely to repurchase, with some analysts beginning to raise the price targets for the automaker's stock price in 2023 as a result of Tesla's recent price decrease and the company's excellent profit outlook through 2022. The price cut has been a significant catalyst for the company's price talk. This year, the new production and expansion initiatives are expected to start. Some bulls are stepping up their backing for the shares of the automobile. Tesla is a bludgeon company worth purchasing now following price drops, claims Berenberg. Adrian Janoschik, a stock analyst with Berenberg Bank, likewise elevated Tesla stock from keep to purchase. Ross, German CEO of Kawasaki Wealth and Investment Management, stated that Tesla's price increases reflects its cost leadership strategy. Trying to add these cuts could also be a spec as margins recovered with products moving out of its California plant, which has expensive labor rates, outdated equipment, and an unproductive structure. Now that Tesla is the vehicle company and energy storage is a thing, several external elements of the organization have been identified through analysis as possible growth drivers. Janoschik believes that the auto industry will increase labor and capital efficiency and that the production of battery cells will provide the business with extra opportunities to grow. Tesla may not be operating at its full potential because it believes more like a vehicle firm on the market than a tech or software company. To maintain the competitiveness against the introduction of new electric vehicle models, Tesla is charging to boost demand. Tesla needed to do this for the car manufacturer to possibly survive even the most severe recessions in the future. According to analysis, Tesla is still facing greater demand than it can meet. Its aggressive growth strategy over the coming year, which includes increasing supply at factories in Shanghai, Berlin, and Austin, Texas, is based on the bedrock hypothesis. Do you believe Tesla stock will ever increase by 10% a day in the future? Let us know in the comments down below. Thanks for watching, and I hope you found this informative. If you like this video, please subscribe to our channel. We're always posting new videos about finance, investing, and business tips that can help you grow your wealth.